Picture this, you're driving home from work, stopped at a red light when suddenly, bam, someone rear ends your car. Car's damaged. You're shaken up, and then comes the worst part. The other driver has no insurance. Now what? I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Here's a number that might surprise you. 1 out of every 7 drivers on the road right now has no auto insurance. That's 14% of all motorists. Think about your morning commute. How many cars did you pass? Now imagine that 1 in 7 of them is driving uninsured. Most people don't think about this until it's too late. They assume everyone else is playing by the rules, carrying proper coverage, but the reality is different, and the financial consequences can be severe. Let me share what happened to one of my clients last year. Nice family, responsible owners, always paid their bills on time. They got hit by an uninsured driver who ran a stop sign. The damage to their car was about $8,000, and they had medical bills on top of that. Because they didn't have uninsured motorist coverage, they were stuck holding the financial bag. That $8,000 had to come from somewhere, and it came out of their emergency fund, the same fund they were planning to use for a strategic refinance that would have saved them $450 a month. So what does this mean for you? First, understand that where you live matters. Some states operate under no-fault rules where each driver's insurance covers their own damages regardless of who caused the accidents. Other states use what's called a tort system, where insurance companies pay based on who is at fault. But here's the catch. If the at-fault driver has no insurance, you're not getting reimbursed for their share of the damage. This is where insurance strategy becomes part of your overall financial plan. Remember, we evaluate everything through safety, liquidity, and return. Uninsured motorist coverage addresses the safety piece, protecting you from a risk that's completely out of your control. Now, some states require you to carry uninsured and underinsured motorist coverage. If yours doesn't, adding it to your policy is worth serious consideration. You can get protection for both bodily injury and property damage, and here's something most people don't know. This coverage can also help if an uninsured driver flees the scene without exchanging information. Let me give you another example. I had a client who was paying about $40 every 6 months for uninsured motorist coverage. She questioned whether it was worth it. Then her daughter got hit by someone with a suspended license and no insurance. The medical bills alone were $15,000. That $40 investment every 6 months saved the family from a potential financial disaster. Here's my recommendation. Contact your insurance agent this week. Ask 3 specific questions. First, do you currently have uninsured motorist coverage? Second, what it would cost to add or increase this coverage? And third, what are the specific laws in your state regarding this type of protection? Now, this ties into something bigger I talk about all the time, insurance strategy as part of your overall financial house. Too many people set their insurance policies and forget about them for years. But your financial situation changes. Your deductibles should match your current liquidity position, not what it was 5 years ago when you first set the policy. If you've been working on building your emergency fund, maybe you can afford higher deductibles now, which lowers your premiums. Or if you've had some financial setbacks, maybe you need lower deductibles to protect your limited cash reserves. This is about suitability, not just eligibility for coverage. The same principle applies to all your insurance. Auto, home, life. Shop your policies regularly. I'm not talking about chasing the absolute lowest rate, but strategy beats rate always. But you need to make sure your coverage still fits your current situation. Think of it this way. Insurance is liquidity protection. When something goes wrong, you're trading a small, predictable cost for protection against a large, unpredictable expense. That's smart planning. So here's your action step. Don't wait until you're the one sitting there after an accident, finding out the hard way that the other driver has no insurance. Take 15 minutes this week to review your auto policy. Make sure you understand what you have and what you don't have, and what it would cost to fill any gaps. If you want help thinking through your overall insurance strategy and how it fits into your wealth building, rsrlinks.com/keysteps, rsrlinks.com/keysteps to get your financial house in order. Remember, 1 in 7 drivers out there has no insurance. Don't let their lack of planning become your financial emergency. This is Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management, reminding you strategy beats rate always. That's the Borrow Smart segment brought to you by rsrlinks.com. Brought to you by gethomeselect.com. Gethomeselect.com.